Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thank you for making time today.
Good afternoon.
Well, let's start with some big news in Korea today. The BOK raising its benchmark interest rate by another 25 basis points, now to the same level it was before the pandemic. So this is the third rate hike following the two we saw last year. Tell us about this decision and what you make of it.
Yes, as you said, Bank of Korea raised its base rate by 25 basis points. Now it has reached the pre-pandemic level of 1.25% on this January 2022 meeting. This was widely expected, given the fact that BOK will continue to talk about inflationary concerns and also mounting household debt. If you look at the policymakers, what they've said is that they projected that the CPI will continue to run at 3% range for the considerable time, which is exceeding the path expected or target they would like to achieve, which is about 2%, or at least mid 2%. So therefore, they talked about this raising interest rate is needed. They also talk about the possibility of raising another interest rate within this year, maybe one or two more times, in order to meet these kind of concerns. If you look at the 2022 GDP growth rate projection, they're talking about 3% of expectations, which is boosted by the pickup in the private consumption and also very strong growth of the export. So they're saying that the economy is quite resilient, and therefore raising interest rates should not affect that much. And if you look at the additional fiscal policy injection in order to boost the economic consumptions, that has occurred, and therefore we think that the raising interest rate by 25 basis points is not going to affect that much in terms of the growth rate. However, though, given the fact that the consumer debt level is well above 100% in Korea as a percentage of GDP, this kind of raising interest rate has resulted into consumer debt interest rate reaching as high as 6%, according to some of the banks, which is very troublesome, and that might cause huge amount of non-performing assets of the retail, and if that's the case, then we could create possibility of the crisis. So we need to watch carefully how this kind of raising interest rate will affect the overall domestic consumption and overall retail individuals. Right now, a bit cautious on the fact that the raising interest rate is this kind of speed much faster than U.S. and most of the other countries.
It sure is. And now going over to Wall Street overnight, we saw another big sell-off in tech. The Nasdaq off 2.5%. We're seeing all this volatility, it would seem, as investors try to revalue the market in view of the Fed's next moves, which will be taking into account inflation. What's the story in the global markets?
Right. When the inflation numbers came in, it wasn't too bad. That's what market expected and market decided. So on that day, the market actually has risen slightly. The inflation number came in at 7% YOY, and also 5.5% for the real inflation. So if you look at the overall inflation numbers, it is definitely concerning, and therefore the speed of the interest rate hike, most of the people are expecting that could be faster than originally anticipated. Originally, people were thinking about 3 times of raising interest rate this year, but now they're talking about rising by around 3 to 4 times. And in some cases, they talked about 8 times raising interest rate because of the core inflation being now at 5.5%. So that's definitely a concern at this point in time. And on top of that, there was news about the jobless claims that has risen quite a bit sharply from about 207,000 to 230,000, which is higher than expected. And that has resulted into concern about the overall economic growth might be slowing down at a faster pace than expected. So all that has resulted into uncertainty. We think that this kind of volatility can last as long as we are wondering about when the raising interest rate will happen. But once the interest rate hike happens sometime in, say, March of this year to June of this year, from that point on, raising interest rates should not be major concern as long as the earnings numbers, GDP growth number comes in accordingly. So far, we think that the fundamentals of the consumer for U.S. is very strong based on the net asset value as well as savings ratios and also the wage growth rate. So therefore, we think the economic growth rate should be reasonably good, and that results into reasonably good GDP growth rate, and therefore the earnings for the corporation should be quite good as well. So right now, uncertain about the liquidity condition and interest rate environment, but as time passes by, the fundamentals should take over. The GDP growth rate being reasonably good means that earnings should be good as well. And in terms of the valuation, it is no longer expensive on the basis of P multiple for 12 months forward. So we do think that this kind of volatility should be used as the buying opportunity of the strong sectors or sectors with a very strong earnings.
Well, now looking at the Korean market, kind of a similar story. Today, stocks down pretty significantly. All the biggest names down. In fact, some of the pharmaceuticals in particular, like Celltrion, Kakao as well. Tell us about the domestic market.
Right. If you look at the Kospi, it's down by 1.36%. Nasdaq is also down by 1.21%. This kind of selling is happening on foreign investors as well as the institutional investors. Foreign investors sold about $246 billion, and institutions sold about $600 billion. So clearly, obviously, the institutional investors are quite concerned about the overall economic picture, and also this kind of raising interest rate environment is not necessarily positive for the equity market, and therefore they're selling. If you look at the Nasdaq, also we saw foreign investors selling about $111 billion, and institutions selling slightly by $65 billion. But overall, if you look at the movement of Korean equity market, people are selling high growth stocks and buying so-called value stocks. And some of these semiconductor names and automobiles, they're considered as the value stock rather than a growth stock because of very cheap valuation in terms of the price to book and PE multiple. So all that means is that we think that the higher market capitalization companies with some growth attached and also cheap valuation stocks will be in primary focus. So therefore, foreign investors should be gradually coming back as long as the Korean won no longer depreciate. And right now, Korean won seems to be stabilizing at around 1190 or below. So if that's the case, then we think the foreign investors could come back as long as U.S. market stabilizes. But at least in the first half, volatility should happen because U.S. market is expected to be fairly volatile as well.
Yeah, that exchange rate has come down from a week ago. Finally, Mr. Yu, the latest Green Book from the Finance Ministry for December is concerned about the impact of social distancing on consumers, also sees continuing uncertainties globally. What's in the Green Book and what do you make of it?
Yes, Green Book is talking about how the South Korean economy is on the right track of recovery on back of the robust exports. But they are concerned about the spike of the COVID-19 cases and also strengthening social distancing rules. And that could cause a domestic demand to fall based on what the Finance Ministry said. If you look at the Omicron COVID-19 variant, economic activity uncertainty continues to persist. And if you look at global supply chain bottlenecks, it seems to be quite ongoing problem. And Federal Reserve, the Fed, has been talking about the shifting of the monetary policy to much more aggressive monetary policy, meaning that tightening could be faster, and also the possibility of reducing Fed balance sheet is also discussed as well. And there is concern about these COVID cases rising so rapidly that we haven't seen in the past 3 waves. The speed of the rise is the fastest. This is the 4th wave, and that is causing uncertainty of jobless rate in U.S. as well as the domestic consumption in Korea. Overall, this is causing some of the concerns. However, though, we are seeing continuation of sales growth on back of the online businesses, and also car spending seems to be quite good as they use sales through the usage of online. So all in all, we think that the fundamentals of individuals remain quite intact, and therefore the consumption growth rate should be reasonably okay. But in any case, all in all, this uncertainty about the COVID-19 cases could cause some of the uncertainty in the short terms. However, though, as the debt rate does not rise, and therefore the consumption should continue to pick up gradually on back of the improvement on the health side, then we think that the Korea's economic growth should not be too much of a problem. But so far, the Ministry of Finance is concerned about this case.
Right, and in terms of the consumer, of course, we have to say that today the government did announce that they're going to stick with the social distancing measures for 3 more weeks, roughly, in the way they have been doing. All right, we'll have to leave it there for today, Mr. Yu. Thank you, as always, for sharing your insights with us. We appreciate it.
Thank you very much.